Taiwanese index is down 0.8%.
The first IPO from the Airtel Group in over a decade.
Only a decisive close above the 22,526 level will get upside targets.
On track for a June rate cut with about 3.
MD and CEO Mr. Puneet Goenka has taken a vote.
Sensex is down 260 points, 73,646.
Core view is still positive on India. We still think that the fact that fundamentals are strong, earnings are coming.
I mean, I think a lot of people have been getting very bullish on copper, and you know what? We agree.
Some banks, not all. HDFC Bank is a big contributor today on the upside. It's having a decent session.
Mid-caps outperform, and the advanced decline ratio, which is steady for today's trading session as well, for a row.
Well, that is the day so far, and it is turning out to be once again a good day. Absolutely no two ways about it. The early cut, the opening cut is all gone, and we are in the green all across. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, everyone, by the way, I wanted to say someone joining us from the newsroom floor. Nigel is here. Nigel, good to see you in the studios. Yeah. Hi.
Hi, good afternoon. So yeah, I mean, all four indices have now turned on the green side of the screen, so I guess that's good.
Yeah.
But I guess trends are still very coming well. Couple are not. IT is contributing, but some of the other big names like Lever, etc., they're down. So a little muddled, but it's green for what it's worth.
Well, and yesterday when we were on Closing Bell, we were wondering whether or not this rested, and yesterday as well we told our viewers that there could be a push. But the price increase, we'll have to see the quantum that's accepted.
Whether
and today, you have all the cement stocks actually that are underperforming today. Even Ultratech Cement is off 2% from the high point of the day.
Yeah.
And ACC, Ambuja, Dalmia, Ramco, all of them, they're either trading flattish or trading mildly in the negative. So the street is hearing us, what we're saying. So that's good news. We'll have to wait for the next 10 days or so and then get a sense of how much this price increase is pulled back.
Absolutely. And, we saw very sharp jumps. And as Nigel said, we addressed it towards the last hour or so. In just a couple of points, right? And the market is, buy the dips is like a mantra. And the dip has been bought, the early morning dip. And at the lowest point, we didn't even get to, I was thinking that maybe around 22,300-ish or so is where the first support comes in, which is the hourly average. And that's where you'll get get some buying. But we didn't go there. I think the day low, let me just quickly check on the index. I think the low is 22,346. So 45 points away from that first hourly, and then the market turned around. No second meaningful dip coming through. A little bit of choppiness after that, but nothing at all. So 20 points higher on the day is what the Nifty is trading with. Small caps and mid caps are doing better, and this is true for the third straight session. Monday was, of course, very large gains. Tuesday, a little lesser. Today, comparable to yesterday. Small cap index doing better than the mid cap index there. And sectorally, IT and PSUs, right? If you look at CPSE as a bunch, that basket is doing very well, sector agnostic. Metals, mining, one area especially, which is doing okay. And real estate is the underperformer, sectorally speaking. And we'll talk more about each of these individual names as we go along. Surabhi.
Yeah, absolutely. So, PSUs, one big theme all over again.
Yeah.
And quite a few financials actually are perking up as well. I guess it's all eyes on policy, not that we're expecting anything to change. But for what it's worth, on the NBFC side, Shriram Finance, by the way, is the big winner on the Nifty now. 3% up. You've got a couple of banks like Axis, which are up and about. State Bank is higher. There is, what else? Bajaj Finance. So NBFCs and banks, that's one space. And on the mid-cap screen, lots of stocks are now flying around. Look at Mazgaon Dock, 12% higher. Cochin Shipyard is 9 to 10% higher. And, a lot of the gains are getting piled up in the last 1 hour or so. So those are the big movers. You also have other names. Tata Investments, 5%. There is Manappuram Finance. It's made a big move, 5.5% up. So I think there's this ample happening beneath the surface, beneath the Nifty, which is telling you it's a 10-point gain. But otherwise, it's been a very active session.
The reason that Shriram Finance is doing a relative outperformance today and yesterday as well was quite strong. Reports are indicating that they are on the verge of finding a buyer for their housing finance arm. We had spoken to the management. They indicated that maybe, in fact, that could be around the corner. And now reports are indicating, I was looking at various notes, and they were suggesting that maybe it could be 100, 150 rupees, in terms of a share price bump up, if it does happen at the valuations that are being talked about. So that could be one of the reasons. And remember, the stock actually has been a big outperformer the last 1 year. After that announcement came that it's going to be included into the Nifty, it started underperforming, which is typically what we say. And, today as well, it's up. Yesterday as well, it was higher. If you look at it, I think in this week, the stock is up close to around 10% approximately. So it's pulling back some bit of that underperformance. Let's get in Mitesh Thakkar, though. Hi, Mitesh. Good morning. Good afternoon. When we spoke earlier this morning, the cues were looking quite muddled. And we did see a big recovery from the low point of the day. So as we speak, actually, the Nifty is as flat as can be, but it's a good recovery from the day's low. How would you approach trade? And also give us your trade on the Nifty Bank, because that will have a volatile final 60 minutes.
Right. Good afternoon. So, while yes, the initial cues were not very strong because US was weak overnight, I think the idea always was to use this decline to buy into it. We've spoken about this in the morning as well, that the morning gap will be bought into immediately. And while, we haven't been able to show the strength to get past the highs of 22, 525, 530, I think the structure is quite positive in terms of indicators looking up on the short and medium term charts, suggesting that that event is a higher probability event. The breakout is a more possible event. So with that, I think we've been trading with long bias on stocks, if not on indices. The index, we had a morning trade which is to buy in the dip, but right now also I have 2 buy calls. PNB just managed to break into fresh highs after a consolidation, so that's a buy. Would recommend a stop just below levels of 128 here. Look for targets of 142. And the other one which I like is Granules India. That's a buy with a stop at 444 for targets of 470.
Okay, all right, got that, Mitesh. Thank you very much for the calls. We'll come back to you and get some more trades going. But Nigel, let's start with a couple of the metal stocks, because many of them came out with their FY24 production updates, right? Yeah. Looking good?
Well, that's right. Let's address 3 of these stocks, Hindustan Zinc, Nalco, and then MOIL. For Hindustan Zinc, they are saying that they've delivered their best quarterly operational performance, and they've clocked in a number of 273,000 odd. The refined zinc production is up by close to around 2% on a year-on-year basis, while refined lead production is down close to around 2%. But the reason that the stock is really excited is because it has an exposure to silver, and it's the only listed silver play. And if you look at it on a quarterly basis, well, you do have silver production that's higher. It's at around 189 tons on a quarterly basis, so that's up close to around 4%. And for the year, the number is closer to around 750 tons, which they had guided for. And that number, silver production for the year, is up by close to around 5%. Now, silver prices have hit a multi-month high, in fact, a 23-month high, and they're quoting at around $26 per ounce. Most on the street are factoring in a silver price of around $25 per ounce. So it's at spot, it's trading higher. So that's what seems to have got the street excited. And how does silver contribute to Hindustan Zinc's numbers? 20% to the revenues, but 46% to the EBIT number. Why is that? Because the EBIT margins, let's get some of those numbers up for you on the screen. The EBIT margins is at around 89% approximately. So that's the reason, because it's a byproduct. That's why they have that edge out there. And anyways, there's very low float, on the stock. There's only around 2% in the market. So the silver factor is what has excited them. Moving to Nalco, well, they've delivered a record number yet again for FY24. The aluminium business has clocked around 4.7 lakh tons. Alumina has clocked close to around 2.1 million tons, which is very, very good. And the coal block, the captive coal block, that's the Utkal D coal block, that's been commissioned, and that's contributing close to around 2 million tons. And we had spoken to the management last month, and they indicated that in the coming year, that's FY25, from their coal block, the Utkal coal block, it'll give close to around 4 million tons, which will be close to 50-60% of their requirement. So that's what will help them in terms of margins. And MOIL as well have recorded their best ever year in terms of a fiscal, and this year is even better than FY 2008, when they delivered pretty good numbers. So production up 35%, sales up 30%, and EMD, which is used in batteries, small part of their business, but that is well up close to around 28%. So it explains why all these stocks are trading well in the green.
Oh.
All right. Well, let's put this question across to Prakash Diwan. Hi, Prakash. Good afternoon and good to see you. Well, what are you making of this, Prakash? Hindustan Zinc, there's only one way of playing silver. That's either you play Hindustan Zinc or you play Vedanta, which is an indirect play, because Vedanta holds stake in Hindustan Zinc, and then you're playing that theme out there. But silver prices are at around $26 per ounce. And I was hearing Manisha earlier today and various experts as well. They are saying that maybe silver has more legs from here on. What's your view on Hindustan Zinc, or if you want to comment on the other two, Nalco and Moil?
Good afternoon, Nigel. So, I do agree, and your explanation was very comprehensive on Hindustan Zinc. It's beyond just a silver lining, right? That Hindustan Zinc carries. And when you buy that stock, you also buy a very upgraded, highly efficient, transformed business on the mining side for the core zinc business as well. Remember, they've been investing a lot of capex in the last few years, from that open cast mining to the underground, subterranean activities they do now. So that's far more efficient. The yields are better. And that's also kind of somewhere that was pending in terms of a capture of the price. So that's happened. Silver is probably the trigger. Going forward, silver will continue to do well. And of course, it will reflect into, the P&L for Hindustan Zinc. But you remember the percentage is very minor. So it's not something which carries a huge weight. But as you rightly said, being a byproduct, there's no direct cost apportioned to it. And hence the EBIT level, things can look very different. But it might not be very long lasting. Out of the three names, my favorite's been Moil. It's come off from its highs, recent highs, and then the news flow is turning positive. So I think it's a stock which probably is under-owned, underappreciated, given a very small segment that it caters to. And I'm not just talking about the electrolyte managed oxide business, the EMD business, which is too minuscule. But overall, the output that they have clocked is after a long period that they have started clocking these numbers. So what happened to Coal India? Of course, you can't compare in terms of scale and utility, this thing. But what's happened to Coal India in terms of once they upgraded their output ratios, this is something similar that could happen to Moil. So I'm extremely positive on Moil. But it could test your patience because people will start kind of interpreting it in a positive way after a while. But if another quarter comes through with very decent numbers, then you probably have some, absolute fresh interest coming into the stock. So I would, out of the three, I think it's the most undervalued and has the potential to deliver more.
Okay, so that's Prakash on Moil and a couple of other mining and metal stocks. Just go back to look at some of the newsmakers of the day. By the way, JSW Energy, which is raising about 5,000 crores via QIP, that stock's having a good session. It's up about 6% as we speak. It's had a decent year as well. The one-year gain, 12-month gain is in excess of 100%. Stocks are holding up quite okay today. Prakash, hi, good afternoon. Any interest here? We keep hearing from the management. I mean, they have big plans on the renewable side, etc. So what thoughts on this one if someone is looking at sort of a capex intense old economy play?
Good afternoon, Surbi. So I agree, so they probably are a bit late to the party. If you really see the frontliners in terms of, players, the power players who have made a significant, improvement in terms of their breadth and the depth of the business, Tata Power stands out as they say. I mean, in fact, Tata Power has, again, I'm saying Tata Power has a deleverage element, which can be a very significant trigger. You remember how Tata Motors has behaved in the last 18 months ever since the indications of a deleveraging on the balance sheet have been evident. The moment that happens in Tata Power, you'll probably have a re-rating and you could still have another 20-25% upside, given its scale of operation, the efficiency it has, the coverage it has in terms of various segments. JSW Energy is still utility focused, and usually the EV EBITDA multiples are not very attractive out there. The other name in that same space, if you look at, is Torrent Power. I mean, it's been making quiet moves, but very dramatically, it's kind of transformed itself from a company that was relying largely on distribution to also generation. So, the mix is changing so well. If you look at what was there 2.5, 3 years back, and now, there's a significant balance in terms of what they do, where the revenue comes from. So I would believe you could look, of course, it's run up also. So, you could argue that you're overpaying for it now, that, all the good, this thing has been captured. But on dips, Tata Power definitely makes a cut. And of course, Tata Power, even at this juncture, is much more compelling than a JSW.
The other space is these shipbuilders, right? I mean, the Mazgaon dock is up 11%. You got Cochin Shipyard, which is up 8%. Garden Reach is up 7%. seems like that after many months of consolidation, because I mean they had basically a one-way rally, and then they all went into a bit of a consolidation phase, but that perhaps is now behind us. So let me just look at Mazgaon Dock. Mazgaon Dock for the last, I think, almost 8 months has not done really very much. I mean the price is exactly where it is. Cochin Shipyard, I'm just looking at these. Cochin Shipyard, of course, is I guess. It's done well recently. Garden Reach perhaps is more like it. Yeah, almost 7 months now. Price has not really gone anywhere, but they're now starting to make some moves on the upside. Prakash, thoughts on these three, and if you own any one of them?
So, good afternoon, Prashant. So I think you've got a very, very promising segment, and I'll tell you why it's promising. It's because of timing. Given the kind of build-up of tension in the South China Sea, what's happening is there's a lot of naval activity which is being pushed for by the US and the UK to kind of make their presence felt in this area. And remember, over the last 10 years, China has invested so heavily into its naval capabilities that the US and the UK or some of the other NATO nations will have to put in all of that they have to defend this particular stretch. India happens to be right at that entry point of sorts towards the South China Sea, and a lot of these foreign ships are going to get serviced here, or going to get repaired here. Now, what it means is that the upgrades or the overhauls, all of that is something which India has a right to win in terms of getting that business. So it's very strategic. It's changed suddenly. It's come out of nowhere in the last 6 months. There was nothing much of an inclination. Now there is clear indication, and I can tell you from people I have spoken to who understand this space, most of these companies, especially the likes of Mazgaon and Cochin, they have their hands full. They have their order books so brimming with orders, and now on top of that you have these opportunities which they will collaborate on. So if HL exports are anything to go by from India, I don't see any reason why the acceptance won't move from air to water in terms of our capabilities to service some of these international clients. So that's something which is very different, and it actually involves a reset. You rightly said, Mazgaon has not done something for the last 6-8 months. It could probably see a very new cycle of capability-driven earnings, which could happen. It might take time, but that's the upside that's very clearly visible.
Okay, got that. By the way, one stock that's perking up now is ITC. There's about a 0.5% increase, not too much by way of price action, but the stock's active. And it's trying to make its little bit of contribution for the Nifty as well. There you go, green on the screen for ITC now. Prakash, we're out of time on the show today. Thank you very much for joining in with all that perspective, and we look forward to our next chat. Right now, we do have to take a very quick break, but when we come back from the break, a special discussion lined up. Exchange-traded rupee derivative transactions now can be used only for hedging starting the 5th of April. What are the implications? We'll have experts weigh in.
Okay, welcome back. You got the market, which is slipping a little bit, not by much. I mean, we were up about 20, 25 odd points or so, but now we are down about 7 points. So this is all in the last, 10 or 15 minutes or so of trade. Market breadth, by the way, is still positive, 3-1 in favor of advances. Advances outnumbering declines. So broader markets, of course, for the third straight session have been outperforming. Well, this is an important story now, which has implications for the currency derivatives trading involving the rupee as it happens on Indian exchanges right now. Remember, currency derivative trading happens on the NSE, it happens on the BSE, it also happens on the Metropolitan Stock Exchange. So what's the issue that we have at hand right now? The RBI, in a circular in early January this year, that is 2024, said that exchanges have to inform users that they have to, that's the clients, the users have to establish the existence of, and I quote, a valid underlying contracted exposure, which has been not hedged using any other derivatives contract, if required. Now, in simple words, the RBI is basically disallowed currency derivative trading with rupee involved on exchanges without an underlying position. So if you're not hedging a position, currency derivative trading involving the rupee would basically be violative of FEMA rules. FEMA, of course, is the Foreign Exchange Management Act. This, of course, all of this goes into effect from the 5th of April. That is this Friday. So it's imminent. It's happening now. Though the RBI notification is dated, I mean, it's a few months old, its actual full import only began sinking amongst brokers, amongst market participants recently. Brokers associations like ANMI, CPAI reached out to regulators seeking a clarification. The RBI, in an email last week to market participants, clarified on the issue, basically saying that there is no change. They actually said that we had clarified on the issue back in 2014, and this is, in a way, a reiteration of that. Exchanges, by the way, earlier this Monday, earlier this week, also kind of attached that circular from the RBI and sent it to market participants as well. So it would seem like the issue is settled, right? Market participants do believe that this will essentially, for all practical purposes, kill the exchange-traded currency derivative market. Daily average notional turnover for this segment runs into, a few billions of dollars a day. Many are predicting between 70 to 90% fall in these volumes as this rule kicks in. We at CNBC-TV18 have reached out to the RBI for clarification, but we are yet to hear from the Reserve Bank of India. Well, that's the sort of setup and the story as it stands right now. But let's actually talk about this with some experts who've seen these markets develop over the last couple of decades. We have Jayesh Mehta. He's Vice Chairman and CEO at DSP Finance. And we have Rajesh Baheti, who's Managing Director at Cross Seas Capital Services. Gentlemen, good afternoon. Great to have both of you here on the program today. Jayesh, if I can start by asking you, I mean, to your mind, is this issue settled now? Is there any sort of room is there any wiggle room here? Or starting the 5th of April, this market basically is, for all practical purposes, the end of the road. What's your sense, sir?
So I think it's a good way to ask, like, settle. I don't know what do you mean by settle, right? So if the issue is settled, yeah, the issue is clarified. It's like settled in, settled in a way that there's no more ambiguity, right? And I just would like to add a little bit more on this, and if I am not wrong, earlier we had in 2008 or so, we had come out with the exchange traded derivatives, and which had a open limit position of 90 to $100 billion or something like that. I think 2014, this has been there that, if required on demand, basically you will require to give the underlying if required. And I think everybody, including everybody, kind of missed that out or whatever it was, but it has been there since 2014. And the whole idea behind that is your OTC market and your exchange market cannot have different rules, right? So even OTC, you can do cash settled if you want to, right? But there again, there is a limit of 100 million where you don't need to give the underlying immediately, but you can give it as and when asked. So that's where it is just aligning OTC with this the underlying market. Now, of course, we do feel sad because we always, being a market player, we feel that the volume's gone down, and therefore, my ability to do more transactions comes down, or whatever it is. But the reality is, there is an onshore derivatives market, exchange traded, and there is a OTC market. You really can't have different rules. And if needs to be changed, then that would require more of a policy decision than the regulatory decision. So that's where my thought process is. But I'm surprised, like, even after the 5th Jan circular, it just restarted it again in like last week or so.
Yeah, no, because I guess it took time for, because, and that point that you made is interesting, right? From 2014 this was made, and the whole, in a way, the whole market missed it, right? For the last 10 years.
Absolutely.
So that is, it's fascinating that how could that happen? I want to ask you, to your mind, Jajbhai, in a bit, why now? Why? Because has there been any great volatility in the rupee, dollar rupee, the currency, basically, or has there been a crisis? I mean, what has really prompted this to your mind? So as best as you can answer it. So I'll just ask you that, but let me get Rajesh into this discussion as well. Rajesh, how do you see this whole issue?
Very interesting. Yesterday, the Business Standard headlines, because RBI had their 90th year celebrations and the PM was here, and two statements were made by the PM that we need to make rupee a global currency, and that the RBI governor said that we'll do everything to encourage free markets. And if you look at what's going to happen to the currency derivatives exchange, this is the exact opposite of what statements were made by the PM as well as the RBI governor. A, you cannot make the rupee a global currency by shutting down 15 years of hard work by one stroke of a pen. And secondly, this is no free market principle that you've got to, in exchange traded markets at least, you cannot have only underlying exposures being traded, because there are no banks as market makers or designated market makers. It's a free market. It's supposed to be a free market, and markets are supposed to set the price. And you will need traders and speculators in a market if you want to create a free market. So it's very, very unfortunate. I beg to differ that the OTC market should be on par with exchange traded markets. That's a trade-to-trade market for specific requirements. And this is a market to discover pricing in a more free and open manner. So it's a very disappointing move. The fact that it has been there since 2014, market missed it, SEBI missed it, simply because it says you don't have to establish an underlying exposure if asked. So that was, it was very confusing in the sense, it was like telling you that you can have a bath but don't get wet. So that's the way I can put it, and now what they've clarified is, if and when asked for, you've got to establish the underlying exposure. So clearly, the fact that you didn't have to explain the trade no longer works, and which is why this exchange, all the exchanges are likely to practically shut down, barring a few trades.
This is, Rajesh, this is for rupee contracts, right?
Absolutely.
So what is, right at the outset, let me ask you, so for all practical purposes, volumes dropped very sharply from Friday?
Absolutely. So, even if you have to trade the Euro USD in India, you have to trade it as a cross currency. You have to trade the INR Euro, and you have to trade the INR USD to create a effective USD Euro position, and then maybe arbitrage it with the USD Euro trade that happens. So in the absence of any INR-based trading, free trading without underlying exposure, I think even the cross-currency trades are likely to see a 70 to 80% dip.
70 to 80% dip. Jajbhai, you want to respond to what the points Rajesh made? I mean, he's calling it disappointing, saying this is, and of course, that point that
I'm not saying. Yeah, I'm not saying it's disappointing. It is disappointing. As I said, like we as market players, we would like all the things to be there, all the avenues to be there. And this market has taken time to develop. So that's no question about it. But the reality is, yes, the circular was there for 2014. In fact, reacting to what Rajesh said is also about the statement of opening up. I wouldn't be disappointed. Maybe that disappointed maybe for short term, but I wouldn't be surprised if in going forward in a policy decision they change things, making it more easier. The only thing is where I differ is OTC and exchange. I'm talking about OTC derivatives, not OTC spot. OTC derivative and exchange. Basically offline, online, having different regulation is something very different. So from that perspective, because OTC derivatives is purely again monitored by the regulator, so that arbitrage should not be there, which kind of was not there. But anyway, we all missed it. I think it was clarified again with the and coming to your question earlier, Prashant, is I don't think it has anything to do with the currency level or anything. But if you look at it, if I kind of missed it, but it was the 5th January circular was more of a master circular, which kind of
No, my
brings in all the circulars.
Judge Bhai, my question was what prompted this? Because there's no crisis. The currency has been absolutely smooth. It's been very, very well managed, right? So that's what I'm asking.
I'm just
yeah.
The promptness is that's what I'm trying to answer. So 2014, it was already there when you came out with and I haven't seen, I'm just saying again from memory that 5th January circular was more of a master circular where you bring in all the previous circulars and other things together in a consolidated way. And that's what, that's when people saw that again because master circular comes with consolidation of all the changes which has been enacted, and that's when people saw, but then people ignored it, and then maybe for 3 months we kind of ignored it, and it's come to as we came near to the due date, right? It kind of situated that.
Yeah. Judge Bhai, how, on the exchanges, would there be banks and treasuries of large corporates also sort of there as participants? I mean, it'll be small, obviously, but are they also present on exchanges, or is it all OTC?
No. It is present. They of course are there. They would always also do the arb between. They will also provide the market. They will also align the arb between the exchange traded and non-exchange or OTC market. So they are always there. And I do understand that volumes will come down dramatically. In fact, right now also the arb has increased because it has to be done very condensed way, right? So it's like almost like 1.5% premium on some of the options being traded, right? But yeah, that's where the banks or a corporate who have a lot of underlying can actually move their position between the exchange and the OTC or vice versa. So that's something, yeah, but it is definitely. I'm not for one saying that it is not, great news or so, but it's a great news or so. But it's definitely people do feel resented. But I think it's all about the policy versus the circular, right? So it's like, allowing people to have open position is more of a policy decision. I don't think it requires really big, wider things. So that's where I won't be surprised if we see some allowance coming there in, say, maybe some month or couple of months or so.
Okay. But that is a policy decision. It'll have to be done like that, not from a regulatory perspective. So, got that. We'll watch out for that. Rajesh, now, what is the practical implication of this? Where do you reckon this market, currency derivative market, will move elsewhere? What was happening here on the NSE, BSE, etc.?
So we've just gifted a very vibrant market to Dubai and Singapore. That's all I can say. It's beyond disappointing. What I'm trying to say is if you're trying to liberalize, and in 2008 when this market was launched, there was a carve-out made in FEMA. There was a specific allowance made for currency-based futures and options. I think it started with futures and options came in later. It started with a $10 million limit. It was enhanced to $100 million. In 2014, they surreptitiously slipped in a change where you needed an underlying exposure, but you didn't need to prove it. Now, if you didn't need to prove anything, then it was taken by the market, so to say, as okay, you can continue to trade. What they've changed in January 5 is that now you need to prove it if asked for. Obviously, in the market, 70 to 80% of the participants are short-term traders or market makers. They're not going to have any underlying exposure. So the market, for all practical purposes, is dead, and people will be setting up their trading workshops and trading shops in Dubai and other places in the world, because the RBI cannot go there and stop the currency trade.
All right. We'll leave it here for now, though. As I said, we've also reached out. CNBC-TV18 has reached out to the RBI, and we'll of course update our viewers as and when we get any information. But as we've been saying, it is what it is, and exchange-traded derivatives involving the rupee from the 5th of April, unless and until you have underlying exposure, it's used for hedging purposes, is not permitted anymore. Jayesh Mehta and Rajesh Baiti, thank you, both of you, for joining us here on this program with those perspectives. So that is an important story which has implications for the currency derivatives segment. By the way, BSE is listed, right? I mean, and the stock's done very, very well. Of course, BSE has a smaller share. NSE is by far the more dominant player in the currency derivative segment as well. But this is also, this market was 50,000 crores notional turnover every day. So we are essentially talking about, and we'll invite the BSE management as well to try and understand what are the big going forward. But that's it on the issue for now. What we'll do is we take a quick commercial break. We'll just play out some sound bites for you. This is Jahangir Aziz, Global Economics at JP Morgan. We spoke with him earlier today. The RBI meeting later this markets. Listen.
I think the concern isn't so much that inflation is going to spike back up. Core PC has been reasonably well. Last mile problem where can US get inflation down to that 2% core PCE number and sustain it there? I think that's where the market is concerned with. But as far as the policymakers, you should listen to Chair Powell, or you listen to the officials around the Fed. Chair Powell's view has been guiding us, I think, to a June rate cut. That's what more, but 3 is what we have in a baseline. I think the earliest you would see cut, but it's going to be a very shallow rate cut. China was the only one that had this $1 trillion market cap out of this mix. Then in the rest of emerging markets, you do not have places you could put in reasonable amount of large capital inflows. The absorptive capacity of emerging market equity markets has. If you think about market cap in India, market cap in India is what, about $4 trillion. You have a company in US called NVIDIA whose market cap is $3.5 trillion. So I think size matters in these things. China had the equity capacity. Emerging markets don't have the equity markets do not have the capacity. You can't put in more than a certain amount of finite money in non-China emerging market equity markets. We have done that. Now we are looking at concerns of overvaluation.
The RBI governor will hold the first meeting of the new financial year amidst a backdrop of high growth, falling core inflation, and stable macro parameters. Will the RBI raise the growth forecast or tread with caution? And how will this impact you, your EMIs, and your bank deposits? Catch the RBI monetary policy along with instant analysis only on CNBC-TV18. The RBI monetary policy at these times.
Welcome back. Well, a few stocks actually have spiked up the last few minutes. AU Small Finance back. There is hope that there could be a weight increase once the MSCI list comes out. So that explains why that stock has perked up and traded. It's moved to the high point of the day. PNB actually has moved up. That's up close to 6.5%. So big up move is what we're seeing out there. And Trent as well. In the last few minutes, that stock has seen a bit of a spike up. So fair bit of action out there, though the Nifty is down close to around 20 points. But it's that time of the day when we get in Nimesh to tell us what's going on D-Street Chatter. Nimesh, take it away.
Hi, Nigel. Another day of mid-cap outperformance. So the trend of for the last 3 days continues, and there is a lot of traction in the broader market stocks. That's the overall feedback. But interestingly, from a flow perspective, the sense I'm getting is there is selling pressure from the larger FIs, and largely there is a VWAP selling across the board at a leading FI desk. So maybe you'll see a negative number from the FIs in today's trade. The contra buying seems to be only in one sector, and that is the financials. In fact, within the financials, for a change, there is a bit of buying interest back in the private sector bank stocks. Well, the PSU banks have done well today, but in terms of FI flows, it's largely tilted towards the private banks. That's the sense that I'm picking up. Again, the overall PSU continues to do well, but within that, the PSU banks have done well today. But from a flow perspective, it's largely towards private banks. And I guess while the markets consolidate, the momentum in the broader markets is expected to continue.
Okay, so yeah, absolutely. The broader market exuberance is back on. Nimesh, so what about stocks? What's the buzz you're picking up?
Well, so in terms of individual names, the first stock is Edelweiss Financial. This is an interesting name. There was a large block today, nearly 3% equity got changed hands, and after that, a big surge in that stock as well. I understand it was a clean-out trade from an FII fund, and from a buyer perspective, the sense I'm picking up that maybe a leading sovereign fund was one of the buyers in the Edelweiss block. So the disclosures could be quite interesting there. The name is Centrum Capital. Again, a small stock, but that's been buzzing off late. Even today, the stock is up 10%, large volumes as well. And the city is anticipating a large corporate development very soon in Centrum Capital. So that's the reason why that's buzzing. The third name is Aurobindo Pharma. The entire pharma space has done well today, but Aurobindo stands out. Good volumes for the second day running. There is railway-based buying as well. Even in Aurobindo Pharma, the buzz is that you potentially could see a corporate development very soon. Remember, the company is sitting on cash, and the utilization of cash would be something the city is anticipating. So that's something to track there. And the last one is Laurus Labs. Again, a big move in that stock, one of the top F&O gainer as well. And in Laurus Labs, the buzz is that maybe the company is likely to back a very large order from an MNC company very soon. So that's the reason why Laurus is buzzing in trade today.
Laurus, of course, is a huge underperformer, right? And last 2 days, it's been buzzing. Today, of course, is the bigger move. Nimesh, the first one, right? You said Edelweiss, large leading FII fund seller. And I was looking at the shareholding pattern. It one or two names struck. One was the Pabrai fund.
Yeah.
And there was some news flow as well over the last couple of months that they were reorganizing their India exposure, restructuring their India exposure, right?
True.
Is the name in the ballpark?
Name in the ballpark, largely, even that's what even I've picked up. And the reason, the explanation that I've got is maybe the fund which was investing into India, that fund has come to that, closure cycle. So they have to sell all their India. The fund has to close down. So that explains the reason why, if you look at the shareholding pattern, they've sold. Looks like they've sold today in Edelweiss. They sold. Here, I think their holding is now become zero, and I guess they sold out of Rain Industries as well. So it looks like that explains the reason why they've been selling into the India holdings of late. But the explanation was for the duration closure, they're selling out of the India exposure.
But a strong player coming in as well, a global pension fund, as you said.
Yeah.
Nimesh, 5% higher on Edelweiss is what we have. Nimesh, thanks very much.
Nigel. The last time I spoke to Monish as well, when he joined on the channel, he was saying that other markets he believes are more attractive as well. And the point that Nimesh made on Sunteck, that's been one of the biggest underperformers if you look at it in the last 1 year or so.
Yeah.
So maybe bulk of that selling could be absorbed, and that's why I think the last.
All right, well, that's Sunteck and some of these Pabrai holdings over the last couple of days or so. Well, I think you got the market, which is, I think, back down 20 points lower. So from the start of closing bell, we're down about 45, 50 odd points from the highs. Mitesh is back with us with what to buy or sell today for the reverse trade tomorrow. Mitesh, what do you have?
the stock side, while the markets have been very quiet and we've seen the days gain kind of given up, the trading bias remains on the positive side. So we'll take long positions as BTST calls. Apart from the fact that, I had given PNB as the call at 230, other PSU banks are also looking good. So Bank of Baroda is something which I would recommend as a BTST. Keep a stop below 272 here. Look for a target of maybe around 280, 282 for tomorrow. And the other is Shriram Finance, which I would recommend taking a BTST with a stop at 25.43 for targets of 25.85.
Okay, all right, got that. Thanks very much for those trades, Mitesh. You have a good second half, and we'll see you again with the market tomorrow. Well, let's move to some interesting news coming in from the mutual fund world. Now, Sohini Andani, manager of India's second biggest large cap fund, has quit SBI Mutual Fund, and there'll be, of course, new managers coming in for some of those flagship schemes. Hormaz is here with more details. Hormaz, fill us in.
17-year journey coming to an end for Sohini Andani at SBI Mutual Fund, and it is a big name in the mutual fund industry. There's news coming in this morning that she resigned, calling quits to her 17-year journey at SBI Mutual Fund, which began in 2007 as head of research, and then she took charge of both of these, SBI Blue Chip Fund and the SBI Magnum Mid Cap Fund, in 2010. Now, the Blue Chip Fund in itself has an AUM of over 43,000 crore rupees as of end of February, with a CRISIL rating of 3 stars. And if you take a look at the returns as well, performance-wise, the last 12 months, the fund has been up 30%. And on an annualized basis, if you check, since inception, the fund has given returns of around 12%. Some of the top holdings, HDFC Bank and ICICI Bank, two nifty heavyweights, form part of the top holdings of the Blue Chip Fund. L&T, Infosys, ITC, Reliance Industries also part of the top holdings. Some other notable names in the Blue Chip Fund are Bajaj Finance, Britannia, Page Industries and Sun Pharma as well. The Magnum Mid-Cap Fund is also the 5th largest mid-cap fund in the country, with a size of around 16,500 crores and a CRISIL rating of 3 stars as well. Now, on the returns basis, for the last 12 months, the fund has delivered returns of 44%, and on an annualized basis, if you check, it's up 17% since its inception. Now, interestingly, the broader market, after the broader market performance that we have had over the last 12 months, the interesting bit here is that the top holding in the Magnum Mid-Cap Fund is cash, and that is almost 8.75%. Some other notable stock names there include CRISIL, Sundaram Finance, Torrent Power, which has been a recent outperformer, and Indian Hotels as well. Some other notable names in the mid-cap fund include Tube Investments, Schaeffler India, Sona BLW, and Max Healthcare as well. So now, in replacement for Sohini Andani, who managed both these funds, SBI Mutual Fund has appointed one fund manager each for both of these funds. And Saurabh Pant, who's been with SBI Mutual Fund since 2007, will take charge of the Blue Chip Fund, and Bhavin Vitlani, who joined SBI Fund Management in 2018, will take charge of the Magnum Mid-Cap Fund. So a big name exiting the mutual fund industry. Won't be wrong to say it's an end of an era.
Oh, indeed it is for SBI Mutual Fund and a lot of those investors who've stayed put with those schemes. So it's a change of guard at SBI MF. Well, Hormaz, thank you very much. We do need to move on now. Let's get you some market opinion. We, in the morning, caught up with Sunil Kaul, APAC equity strategist at Goldman Sachs, to discuss his outlook on the Indian market, as well as some of his top sectoral bets at this point in time. Take a look.
The primary concern around India in terms of clients has been around valuations. Although I would say our core view is still positive on India. We still think that the fact that fundamentals are strong, earnings are coming through, that should offset some of the concerns around valuation. So we still like the market. Beyond those large gaps, there's also the theme of kind of high-end consumption, affluent India, as we call it. There is a theme of Make in India. There is a defense theme going on. We also are very bullish on the real estate cycle, and we think the best way to play that is through the building material or the late cycle construction materials. So if you go through these themes, I think there are enough themes within the market which investors can play. We, as I said, metals, we're kind of more neutral there. We do like, if you club utilities in the broader commodity spectrum, we do have an overweight on utilities, which is more a thesis around sort of peak power shortages happening and focus on renewables. So that's another way to play that. Where we are most cautious on within this sort of cohort is the oil marketing companies, where we think there is still pressure both on refining margins, but also on the marketing margins. So I think the March quarter numbers and the 1Q reporting season, which will just start, I think the numbers may still be a tad softer, obviously given the guidance from Accenture as well. But we think March will be better than December already. And going into the second half of the year, we think numbers will start to improve much more materially. I think we still are in the June cut camp. I think that the Fed rate cut cycle starts in June. I think having said that, so we're kind of penciling in 3 rate cuts this year. For RBI in particular, I would say, I think the key, obviously we expect them to stay on hold in the policy meeting later this week. Obviously, they'll be probably sounding more optimistic on growth, commit the 4% inflation target eventually. Our own sense is that this quarter you will see liquidity easing much more, and eventually RBI starts cutting rates in third quarter of this calendar.
Welcome back. You're with us on Closing Bell. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, joining us on the show now. Mayuresh, good to have you on. You know, just taking a look at the kind of trends we're seeing in the large cap space, there is some kind of, confidence that seems to be building up on IT stocks, because that's the next event for the market, right? As we get into earnings season. What have you made of things, considering Accenture got everybody a little concerned, and now here it is, we're, approaching the litmus test? You're on mute, Mayuresh.
Sorry. Afternoon, Surabhi. So I think after the Accenture guidance, the kind of knee-jerk reaction that most IT stocks took was a given. But there are 2 things to probably observe in these quarter's numbers. One, in terms of the revenue trends itself, both in terms of constant currency and dollar terms. What is the trend that you're probably seeing in terms of the revenue trajectory? Vis-a-vis the kind of clients that are getting signed in. Is there any sort of pricing pressure that is still existing on the books or any delay in terms of client signings as far as the multi-billion-dollar deals are concerned? And the second element is, obviously, I think a large part of the market has now gestated with wage hikes behind us, a lot of increase in outsourcing cost in the previous financial year. EBIT margins have normalized, and they should remain in the normalized mode as well. The large part of expectations is that once the rate cut cycle starts, a lot of the industries that have probably got affected, BFSI, manufacturing, retail, should start coming back in the second half of the financial year, both in the Eurozone as well as North America and the Southeast Asian markets as well, which should give some element of respite as far as the second half is concerned for a lot of these IT majors. So to that extent, I think there is hope that second half will be relatively better in this financial year for most IT companies. But I think these quarters numbers will lay the foundation in terms of what the management commentaries surrounding all these issues are. So large caps might still remain range bound for all these issues. Mid caps might still enjoy a lot of the stability in terms of pricing, order flows. And therefore, I think we continue holding on to stocks like a Persistent, KPIT in our global portfolios.
Okay, all right. Hi, Mayuresh. Good afternoon and good to see you in. Mayuresh, if you're looking at your electricity bill, for the last couple of months, you'll be happy because, not too much utilization of the AC. But in the next couple of months, it's going to be very, very hot. Almost the entire night you have your air conditioners on. And some of these stocks, Volta, Symphony, all of them are booming. How would you, try to pick up some of these stocks? Because Volta's case in point has actually been a big underperformer on margins, on market share. But now it's moving back towards those 52-week highs. What's the pick of the pack for you?
Afternoon, Nigel. Oh, no, you're absolutely right. And if this continues, I think 24-hour AC is going to be a must across a larger part of India. Having said that, if you probably dissect through in terms of how numbers have been till the last quarter, 9 months of FY24, for stocks like a Voltas or a Blue Star or a Symphony, Symphony has clearly been struggling in terms of numbers, in terms of their product mix, and in terms of geographies as well. For Voltas in particular, I think the electromechanical project segment, the cost overruns have been a little bit too much on the higher side as far as Qatar is concerned. And therefore, there might be some elements in terms of EBIT margin underperformance as far as the electromechanical project segment is concerned. The unitary segment, they've maintained market share at 19%. Expectations that management sound very, very hopeful in terms of volume growth. Similarly, for our Blue Star, if you probably look at the margin performance, for 9 months, they've clocked almost 6.7, 6.8% compared to a 5.7, 5.8%. They are gaining more in terms of the unitary segment, in terms of market share as well, largely from unorganized players as we speak. And as this entire thesis plays out in terms of ownership across urban cities, tier 1, tier 2 cities as well, with real estate in its boom and peak as far as the 6-year cycle is concerned, a large part in terms of growth expected to remain in higher single digits or lower double digits in terms of volume growth might be a given. Obviously, from a valuation and from a pivot perspective, as we see it at Markets with India, all key moving averages, most of these stocks are moving in late stage basis as well. So anybody holding on can continue holding. But the proxy to this that we like at Markets with both in terms of our EPS, RS ratings and rankings and our cancelling methodology is Dixon Technologies. Valuation might be a little bit on the higher side, but you're also seeing parts where consumer electronics, mobiles will become a part of Dixon. Semiconductors as a space is a huge space that can probably come through also in the near future. So valuations might be a tad bit expensive, but a few of these EMS players, a few of these outsourcers like Dixon, Amber can be proxies to this entire story.
By the way, as we're running towards the close, quite a move on a lot of PSU banks today. Look at PNB. PNB is up now 7.5%. Let's quickly get the charts going. Bank of India, Bank of Baroda, a lot of these names, Union Bank, Central Bank of India, most of the PSU banks have raced away to end at the day's high. Some of the private names are also there, like RBL Bank, but really the move is far more pronounced in PSU banks today. Mayuresh, your thoughts? Would you buy anything now? PSU banks?
Yeah, so I think any pullback on a bank, on a PSU bank like Bank of Maharashtra as an example, should be remains on our watch list. Again, it fulfills most criteria, strong institution holding as we see that canceling, strong earnings growth, and they've got all the characteristics that we look out for in a growth stock. Having said that, the kind of numbers that they've placed and posted so far, 9 months, 24, it sounds very, very encouraging. Deposit growths have been strong, advances growth have been strong. Yes, there has been some element of compression as far as NIMs are concerned. But if you're assuming a second half rate cut scenario globally and domestically as well, the NIMs and spreads should come back.
Okay, I think we've just lost that line with Mayuresh. We'll get him back on. By the way, just looking at Angel One pop up on the screen. Look at this. I mean, there's a huge surge on Angel One right now in the last couple of minutes. It's anyway a high-flying stock. It's been a big market outperformer. And it seems that people are still lapping it up. Angel One is a stock. We should perhaps get the intraday chart going.
It's one of the few stocks when the market, the broader market had seen a large correction. It came across as, you're looking for what to buy. This perhaps is, if you believe that capital markets will stay buoyant for the next foreseeable future. This is, of course, one of the largest players in that space, highly profitable. And was available. I think it's still not very expensive. Should be about 25 times earnings, FY25 earnings. But it's come up. The low was, by the way, 2,300, and It's now almost 3,200 odd rupees or so. So that's a sharp move coming through. Market and the indices are not doing very much at all, but but that doesn't take away from the fact that it's a pretty vibrant screen once again in the broader markets, so as to speak. And look at the PSU stocks, right? I mean, the shipbuilders is one, but PSU banks, etc. We were talking about. PNB is up 7% now. Now, PNB is, if there was, I think it would still be one of the cheaper public sector banks, large public sector banks. Maybe it's still the cheapest on that size, but there's a very large move which has come through on PNB, and many other names actually. HBL Power is another one which comes up. It corrected. The high was about 600. The low in this correction in January was about 378. It's bounced about 100 rupees from those levels, and so on and so forth. So lots of action, lots of activity in the broader space. Nigel.
All right, well, let's start winding down then. It was a day again of mid-caps. The mid-caps did very, very well. They were up close to around 0.5%. The Nifty goes home a little bit in the red. Now, stocks that did very well in today's trading session. PNB, IDBI Bank, they were flying away. IRDA, volumes very, very high on that one. That stock was up and about. Edelweiss Financial, that stock was up close to around 5%. Massive volumes out there. The mining stocks, you had Nalco, you had Moil, as well as Hindustan Zinc. All of them came out with an operational update. They have a bit of a tailwind with them. All of them both flying away. Vascon, another stock that saw a sharp correction. Stock was up in today's trading session, up close to around 6% in trade. IMFA, we spoke to the management yesterday, and the management sounded quite optimistic about prospects with regard to expansion and diversification into ethanol. So that stock as well went home with solid gains in trade today. Add to the list a couple of other names, some of them big underperformers who have popped up in trade. You have Dish TV and HCC. Both of them made it to the gainers list.
Once again, it's PSUs. They're really, topping the party. They're really at the center of the floor and they refuse to go away.
Once they get moving, it's difficult to stop them.
There goes the bell, and we've already outlined the PSU banks. PNB, of course, leading from the front with that 7.5% up move. But the shipbuilders, look at Garden Reach, 9%. Look at Mazgaon, about 12% higher. Cochin Shipyard, about 8-9% higher. Been a very strong part of the market as well. So once again, you've got over 1,700 stocks advancing today, just about 600 declining stocks. The action firmly remaining in the broader market.
All right, well, I think that gets us to a close of this edition of Closing Bell as well. We are absolutely flat once again for the Nifty. I mean, actually 2 days now, it's been within a few points, less than 10 points. But of course, from the lows, big recovery yesterday and bigger recovery today as well. It's a wrap on this edition of Closing Bell from all of us here. Goodbye. Thanks for watching. But Surbhi and I will take